Hi, everybody. Scott Riley, the Market Update Desk, February 5th, NMLS number 157524. Well, we got some good news for the bond market in one aspect and a little bit of a pullback in another aspect. Let's go through what's all playing out today. So today was the second big data report for Jobs Week. And this comes to us from the ADP Payroll, which is private payrolls, as reported by ADP, showed that we were up a net 183,000 compared to an upwardly revised 176,000 expected. Now, initially, the market before the upward revision was looking at 122,000. So definitely more than expected. Pay for workers who stayed on the job grew 4.7% annually, or 0.1% in December. Now, that was in line with expectations. Of the 190,000 jobs created, almost all of them were from the services sector. Now, let's kind of break down where these jobs came from. In the numbers we are seeing, sorry, I'm going through my notes here. We saw transportation utilities come in at 56,000 new jobs. And then we also had leisure hospitality, 54,000. Health and services added 20,000. But manufacturer only added 13,000. So job creation was fairly evenly spread out throughout these different indicators. Now, that's a very positive sign for what we were looking at. Now, so that kind of started the day out as a little bit of a negative in the bond market, but then we found a couple other pieces of information. So U.S. trade deficits, that grew from 96.68 billion to 98.48 billion month over month. It is a little bit of an increase, but not as much as the market expected. It is still one of the highest numbers for trade deficits that we've encountered in a long, long time. I think the previous high, our top end was a 122 billion trade deficit. We're under that, but we're still at a pretty big trade deficit numbers. So the other big news is the Fed Reserve's quarterly refunding announcement. What they're anticipating is needing to sell 125 billion in bonds. Yes, that's with a B. It is a big number in securities in the latest quarterly refunding request. So that's what they're going to be needing to sell going forward. Now, the breakdown of what the treasuries that are going to be sold is about 58 billion in 3-year notes, 42 billion in 10-year notes, and 25 billion in 30-year notes. So what we're seeing is a little bit of shift from the shorter term note sales that we had under Secretary Yellen, which has now put us in a very bad position, to longer term maturities. So the market definitely saw that as a positive. And this 125 billion was actually the expected amount that the market was looking that we would need to sell. Now, if you remember in previous quarters, for many, many quarters, this refunding request has come in higher than expectation. So the market did rally on the news of having less than expected treasury sales. What that did is it gave us about a 7 basis point movement in the 10-year treasury and about 18 basis points in mortgage-backed securities. Now, this is we recovered some of what we kind of pulled back from yesterday. Tomorrow's probably going to be a quiet day. We do have jobless claims, initial and continuing claims. Friday's going to be the big one. What is the BLS jobs report going to show? We're seeing the ADP came in higher than expected. So are we going to see more than expected in the BLS jobs report? And what is the revisions going to show for the November and December report? Those are the big questions that will come out on Friday. We'll keep you up to date. But it's a great day. We got some sunshine in West Michigan. We got activity going on with buyers. It's a great afternoon. Give us a call. We'll help you with your mortgage needs and explain why understanding this data is critically important. 616-293 2189. Have a great afternoon.